Hello, everybody, and welcome to the Crypto Hipster Podcast. This is your host, Jamil Hassan, the Crypto Hipster, where I interview founders, entrepreneurs, co-founders, executives, thought leaders, artists all around the world in crypto and blockchain. And I have another amazing guest for you today. He is the founder and CTO at Flipside Crypto. His name is Jim Myers. Jim, welcome to the show.
Great to be here. Thanks so much for having me on today.
You're very welcome. Very welcome. So, first, I'd like to know what is your background, and is it a logical background for what you're doing now?
Is anything in crypto logical? Yeah. So, I'll start with a bit on Flipside. I started Flipside in 2017 with my co-founders Dave Balter and Eric Stone, and our goal at the time was, how do we make blockchain data both usable and understandable? As a team, the three of us, we've been working together for over 10 years now, and have started a couple companies together. Been through some exciting times, and we've always been building things at the intersection of data and product. I first really got involved in crypto more as a hobby, I would say, in summer of 2015 around the launch of Ethereum. And I come from a background traditionally in economics and was fascinated by Ethereum, mainly because, in microeconomics in particular, you spend a lot of time running lab experiments, attempting to create sort of these contrived scenarios around observing human behavior. And in crypto, smart contracts essentially enable you to do these experiments on a massive scale, 24/7 in real time. And I think about that almost as like programmable human behavior. So this concept kind of really fascinated me and pulled me into the space. And while Flipside is not a smart contract protocol to say, but many of these ideas that kind of brought me in around incentivization, you'll see run through our product and our platform today, and how we reward and incentivize users on our platform.
Got it. So, what is Flipside all about, and why is it a step ahead of other crypto analytics players?
Yeah, I'd like to always start when I think about this question. We get asked a lot, how are you different and so and so, and our mission at Flipside is to enable blockchain ecosystems to succeed. That's why we exist as a company. That guides how we make decisions. So I would say first, we do have a lot of really great data, but we are not a crypto analytics provider, at least in a traditional sense. And to understand why, you have to sort of understand our business model. What Flipside is, though, is it's really a commercialization engine for blockchains and protocols. That's how we talk about what we are building internally, and that's how we talk about it with our customers. Our customers are mainly blockchains and protocols, and our model is pretty simple. Flipside customers delegate tokens to us. We run our own bare metal validators and infrastructure, and we use the yield from our validators to drive growth outcomes for our customers, the blockchains and protocols. Any excess yield we keep in native tokens, so that we really only win when our customers win. So we grow ecosystems by activating community members. We have a network of over 75,000 analysts to drive usage on chain. And now data might not seem like the most obvious path here to growth, but it plays really this interesting foundational role in how we do it for customers, and how it's important in this space. Blockchain data is particularly unique. I think ironically, for as open as blockchains are, the data is incredibly hard for the average person to access and to understand. So our tech basically enables users to really do three key things, I would say: build on top of blockchains more quickly, make rapid decisions, and I think really the most important is shine a light on what's happening right now, so the space can form narratives based on on-chain truths. And the magic happens, I think, when we activate folks on our data, turning sort of potential on-chain energy into kinetic energy. We incentivize our community of 75,000 users to provide insights and shed light on what's happening, and then drive narratives that bring in new users and developers to these ecosystems. And to date, we've paid out over $6 million to the community to deliver outcomes for our partners.
It's pretty good. Okay, so you said 75,000 data analysts. Okay, so say somebody like me, not me in particular, somebody like me who has an extensive experience building databases and being data analyst,
Yeah.
want to join your protocol, your program, Flipside, and be a data analyst and get paid for skills and abilities. How could somebody who's a data analyst be able to do that? And what do they do with a day to life?
Yeah. So anyone, it's free to sign up and join our platform. We have a pretty robust community. We then, there's a variety of different things you can do to get started. So you can start writing queries, start building dashboards. There are kind of key questions, insights that a lot of our partners are after, and a lot of these are kind of publicized in our Discord. We also have a network of what we call ambassadors, who also, work with different subgroups and communities within our larger community. So if you join our Discord, you can get involved in those. And then what we'll do is we call it top end programs, basically reward people for how popular their dashboards are. So for every hour that you are in a top, 30, top 50 or whatever, you are earning money for your dashboard. So we have an algorithm that computes this based on sort of the reach and scale of your dashboard and narratives that you're driving. And so there's a great opportunity for anyone really to come in, start from the beginning, and then grow and earn. We've been a great source, I think, of talent, actually from our community getting jobs in this ecosystem. There's lots of great stories, you can see on Twitter of people starting as just an average, or a beginner SQL analyst, and then going all the way up to getting a job in this industry. And so it's always great when we hear stories like that.
That's what I thought would happen. People are doing it in SQL. That's I was a manager in a SQL shop for 5 years at AIG, so always curious how it works. So you said a magic word earlier.
Okay.
You said the word yield.
Yeah.
A lot of people got burned over the past few years chasing yield. What's been the role of data analytics and DeFi? What's the role of yield, and what do you think will be the areas of breakthrough in the next DeFi growth wave?
Yeah, great. A lot of great questions kind of packed into there. So, I would let's come back to the yield one. I think there's an interesting perspective on. I think our yields or rather our outsized yields, is it a feature or a bug in this space? But I think what role does data analysis play in DeFi? I would say, one of the most I think critical use cases for data is really to drive on-chain truth based narratives. So like what is actually really happening, not just, what's being hyped up, but what is reality. And I think DeFi is no exception there. It's just as any other part of the spaces. Shedding light on liquidity or trading volumes gives insight into like what's a healthy ecosystem today, or what might be about to be a rug pull. I would say when we started Flipside in 2017, the level of complexity to ingest, parse, and make sense of blockchain data was a fraction of what it is today. Over the years, we've added multiple platforms, L2s or protocols layered on protocols, liquidity that's distributed across multiple chains. This layering of complexity, I think, forces not only Flipside, the space, but to get the full story, to shift from just a chain-based perspective to an application or a category-based perspective. And so what I think, it's maybe not the most exciting breakthrough, but I think given, where the space is headed in terms of just the layering of complexity, where we see analytics go or data go is sort of the shift from just a chain-based perspective to an app or category-based perspective. So if you want to look at swap volume on Uniswap, you don't want to look at that on just Ethereum. You need to actually get the whole picture across all of the chains to understand the health of what's happening with that protocol. And so we're already doing some of this today at Flipside. We have a cross-chain data schema where you can look at all the DEX swaps across all the chains, or you can look at all bridge activity. I think people think really the more and more as complexity is layered together, people think in terms of apps or categories. And so I think data is going to shift in that direction to deal with that.
Okay. So you're able to get a full picture of the different ecosystems and compare them to how healthy are they one another.
Exactly. Yeah. Yeah. Everything becomes sort of scattered as we have, or not scattered, fragmented a bit, as you have more and more ecosystems come online, and each specializing in different things. And so, they all add value in different ways. It's just how do you get that complete picture from a protocol perspective? Because from a protocol point of view, you want to be deployed probably in a lot of different places just to get exposure to more and more users.
Yeah. And then the yield perspective.
Yeah. Um, So with yield, I would say, you have to know what you're getting yourself into. Um, High yields, typically are high because they are risk on assets, or at least more risk on than other types of assets on chain. And those typically will go down over time as more and more people come in to an ecosystem. Um, that said, I would say, some things are high yield because they are rug pulls. And I do think there's an element of the space, maybe a degen element of the space that likes to participate in those. It is fun. I would say that is gambling. But there are people that it's a rug pull. I think the difference is when you're in something that's about to be a rug pull, but you actually don't know what you're in. So I'm always worry of high yield situations, like why is it so high. I would say if you know what you're participating in, that's one thing, but if you don't know what you're participating in, that's another.
Got it. It's funny because with the gambling perspective, I used to gamble. I used to go to the casino and I love to go to the casino. And now that I've been in crypto for years, and when I go to the casino, I don't touch it.
Yeah.
You know, so it's just a different perspective, I guess. Now, liquidity. You mentioned liquidity, right?
Mhm.
So why is keeping track of liquidity in DeFi an integral part of DeFi research for both your users and companies and also potential investors?
Yeah. I think there's two things to think about with liquidity, or at least how I think about it. One is where is liquidity flowing and how much is flowing somewhere. That tells you a lot about the popularity and the health of an ecosystem. So if I see a lot of liquidity, say, flowing to Blast is a chain that's going to be launching soon. That tells you something about where value might accrue long term. And then people have various, ideas around, okay, if you attract X amount of capital, okay, that's going to bring builders and so forth. I think the second thing is, this is maybe a bit more in the weeds, but when you're thinking about liquidity on a chain, is there support for a native stablecoin pair? The dev experience in particular becomes very difficult if there's no support for stablecoin swapping. Um, so that's a second thing. I think there's, when we think about this first one, liquidity flows and how much is flowing into an ecosystem, there's sort of two competing ideas, I think, for bootstrapping a network. And one is like start with capital or start with users. And if you start with capital, example there, like I mentioned Blast before, they haven't even launched yet, but they have a multi-sig that has something like, last time I checked, it was like over $2 billion. Maybe it's over 3 at this point, but locked in a multi-sig for people that want to get access to that chain when it launches. The other perspective is to start with users. I think Base was a great example of this with their on-chain summer efforts, doing some mint.fun, launch of friend.tech, I think, really had a huge impact there. I think about all of this though in the context of which one is going to be the successful mechanism for bootstrapping a network. And so the context I think about that, and an advisor shared this with me, his kind of perspective. There's sort of 3 stages, he says, to blockchain users. And I think you have your first stage, which is early adopters that want that dopamine hit of finding the next big thing. The second is people that just want to have fun. They're there to make money. They're chasing high yields. They're playing this game, sort of musical chairs with pools being rugged, not being rugged. They're there for airdrop farming. They're there for points. And then I think the third thing is real apps emerge that are not necessarily that have a financial component, but are not financially centric. I think this is a separate topic, but I think everything in crypto ultimately is a finance app, even if it is not essentially a finance app. So these three concepts, or these three kind of stages, early adopters, people that just want to have fun, or real apps emerge. This third one, I think the question is like, how do you get to escape velocity? How do you get to number three? And so, do you start with capital? Do you start with users where liquidity is flowing? Time will tell like which one works more effectively. Essentially, usage and liquidity, I think, of are two sides of the same coin. Like, right, you can't play in an arcade if you don't have coins. So where value ends up sitting, where liquidity sits, can be a big leading indicator of where value may accrue.
See, the concept to me is something that I think a lot of people look for, is that concept of exit velocity.
Mm-hmm.
I'm opposite. I look to for long-term sustainability, and not to exit. So why would
When I
exit?
say, I would say when I say exit velocity, I don't mean, what I meant to say is like, I use the word escape, not exit. So like escape velocity. And what I mean there is like, okay, so you have a bunch of users that pour into an ecosystem, maybe driven to have fun, maybe driven because of money. Eventually, with enough users, with enough capital sitting around, the idea is that builders come to an ecosystem. They start building things that have like real value. It's not just gambling. And so some of those users will stick around and start using these real apps. And so what I mean by escape velocity is is there enough initial activity, enough users, enough capital that real things get built and then real users stay to have a sustainable long-term outcome?
Got it. Okay. All right. So I'm looking at things the right way. Great. I'm in the
Yeah.
third bucket.
Yes.
Um. So that's really interesting comparison. You have blast versus base.
Yeah.
What have you seen had to be the more successful and sustainable and long term? Actually, what are the benefits of both, right? Approaches, and what do you see as the one with the more sustainability for long term?
I mean, I think time will really tell that. I would say it's pretty unprecedented, actually, what's happening on Blast right now. And so I think I'm really curious kind of how this sort of unfolds. Um, I think there's risks to both, right? So in the first example with Blast, like, okay, those people are signing or putting their capital into a contract because they would like to get an airdrop, right? What percentage of those people are actually going to start activating in the ecosystem versus what percentage, are going to leave the ecosystem? Same thing can be said of like, the base example of like starting with users, right? Like friend.tech was a fun, interesting app, or is, and attracted a lot of users. What percentage of those people are actually sticking around and staying there? The one thing that's interesting about an app like friend.tech, though, is it has the power to move value on chain. I haven't looked at the stat in a while, but I was doing some analysis on friend.tech a few months ago, and something like it was like 60 to 70% of all ETH that had been bridged over to base was bridged for friend.tech. And that can be driven by an app layer experience. So I think both of these ultimately, though, get to the same challenge, right? Like, are users sticking around? So like, and are users sticking around, there has to be something for them to do. And so something for them to do is driven by developers, right? And so it depends on how long that interest can be kept so that developers have time to come into the ecosystem and keep building interesting things that keep that value staying within the chain.
Interesting. I didn't. Yeah, I always wanted to know how friend.tech would hold up against. Like, I'm in a Facebook generation, right?
Mm-hmm.
High school friends, college friends, we're on Facebook, right? How can friend.tech or other socialized platforms be a replacement for Facebook over time, and what needs they need to do to make it that way?
Yeah, I mean, I would say friend.tech is less a replacement for those things. It's a fun friend.tech is a fun way to essentially bet on your friend's popularity. And there's extensions of that. You could imagine different versions where you take that. I would say Farcaster is more the closest example to replacing, a Twitter or a Facebook. Thing that fascinates me about Farcaster is like it is essentially like it's not. Twitter was never on chain, but like if you go back to the early days of Twitter, there was this notion of separation of protocol from the app layer, the client. And so, you had lots of different client interfaces to Twitter. And so now we actually really do have that with Farcaster. You can you create your account, you have your wallet. I have an app on my phone for Farcaster. I take my wallet, I go online, and I'm using a totally different app, right? And so the app experience is totally decoupled from the protocol. And that means that different clients can organize data in a different way and show you different things and really give you different types of experiences. So I think that comes with you being able to own your own data. And so all sorts of interesting things happen where anyone is free to layer novel UX on top of that. So I think, I kind of see that as an exciting thread or trend of a path where we're going to head down.
Improved user experience is something that's been missing for years.
Yeah, huge. Yeah, big problem.
So, with that said, DeFi is complicated, or at least people think it is. How do we get that experience to be for the user so that it becomes less complicated while they're using it and they have a better understanding and they're able to, assess liquidity in an easy way that's easy for them?
Right. So I think that depends on who the end user ultimately ends up being for some of these platforms. Like if you are trying to provide liquidity or trying to make investments, then I think being cognizant of DEX volume or where liquidity is flowing is very important. If you're just an average user that's trying to accomplish something on chain, where to accomplish that task you might need to swap token A for token B. I think that's a different story. And I think we have a major UX problem right now where people have to go from app to app to app to accomplish a task. So like any task is like a series of different, there's different paths you could take to accomplish that task. And so the challenge or the opportunity rather I see is can we build a UX on top of this that actually enables us to make that path really simple for the average user? And we totally can, right? Any of these protocols can be layered and can be put together into a cohesive experience. We really haven't invested as a space, or I haven't seen anything that has done that just yet.
Right, just yet. But
yeah.
But because they're moving from protocol to protocol to protocol, there's bridge hacks. There's a lot of them in DeFi. Rug pulls, bridge hacks. How can we stave them off? For the future. What are your thoughts on how that needs to be done so we can have that not be a thing anymore?
Yeah, I mean, a lot of hacks are because traditional bridging well, in traditional bridging, right, you lock up tokens on one side, and then you're issued or minted a token on the other chain. And so there's this huge honeypot, right, of tokens on one chain that hackers can go after. And because code is written by humans and humans have flaws and introduce errors into systems. I think any system, can be prone to a hack. Of course, there's robust checks and security audits and things like that. These things go through, and some of them that have gone through more extensive audits, are not as easily hacked. But even things that have gone through audits have been hacked. What I guess with bridging, what I'm most excited about is something called intent-based bridging. Where instead of you committing the actions of, okay, I'm going to do this, action A, action B, action C, and you lock up your token somewhere, you kind of declare out to a network, I would like to move my assets, from Ethereum to Polygon. And then somebody off-chain, a network of relayers, seekers, they compete to solve that and do that for me. there's this concept of where, I mean, you can still get some of the honeypot stuff if you are locking your tokens on one side into something. But there's versions of this where you burn your token. So you don't, and then you burn it on one chain, and then the other chain, you are minted that native token from this, relay or seeker network. And so you eliminate the honeypot from this scenario. And so that kind of eliminates, there's nothing to hack. So I think there's a lot of exciting research happening with that. I've heard some buzz that maybe USDC might be adopting some of this. So we'll see. There's some interesting stuff, I think, happening there related to bridging. On rug pools, I would say, this, again, this is like, is this a feature? Is this a bug? Like rug pools will sort of, when you think about AMMs, liquidity pools, they will sort of there's always the possibility for them existing. The larger the pool, the more capital in the pool, the less prone, I would say, you are to this sort of exploit. There are also other rug pools where, people know that, like, there's high yields. But like I said before, people know what they're getting into, right? It's a game of who's the last one standing in the pool. So just know what you're getting into. We've uncovered so many things just through kind of investigating a bit on, there's this concept sometimes you'll see on Twitter, like people will pump up different new pools or tokens that are emerging. And a lot of these accounts are actually connected, and especially like whale accounts. And so there will be these coordinated efforts to draw interest to a newly created liquidity pool, essentially to get a bunch of people to come into the pool, provide initial capital, and then they'll basically rug pool by swapping out to the more valuable asset. It looks decentralized. It looks like it's all these different actors and people, but then if you actually look on chain, once you get some other wallets, you can actually see they're all clustered together and they're the same identity. So I'm always, wary of like anyone who's like, got to get into this new token with this high yield, because we've seen so many times how these things are just coordinated efforts to exploit the average user.
I hate to name names of cryptos, but I think I've seen that. So,
I think we all, have seen that and know maybe some people that do that.
okay, great. I don't want to name names.
Yeah.
So we are, I hope, and I could be wrong, but I hope I'm not wrong, is we're headed full cycle, right?
I hope so.
We haven't seen it yet. I mean, we've seen a little bit of price increases for a few things, but we haven't seen, what we had back in 2021 yet. But certain schools of thought are that middleware, DePIN, and AI will play a major role in the next bull cycle. What metrics should we be on the lookout for those? And what are your thoughts on maybe a DePIN summer or an AI summer or something?
Yeah.
What do you?
I think so. I like to separate this into two parts when I think about, are we on the verge of an next bull run? I think if you look historically, bull runs are always a function of global liquidity. And so there's sort of this what's the macro environment that we're in? And that's typically driven by central banks, namely the US Fed, with interest rates. And so I think if interest rates can hold, or if they go lower, that's very bullish for opening up more liquidity that has the potential to flow in. We've been in a low interest rate environment. We had been for a while, but every sort of bull market has coincided with sort of this increasing of liquidity by the Fed in the market. The second macro thing would be like Bitcoin halving. Bull markets have always coincided with those. And I think the ETFs as well, they create this new sort of funnel into the ecosystem for folks that may be, crypto curious. So that's kind of, to me, like, okay, overall, is the macro environment set? And then it's like, okay, here's the liquidity TAM, right? Here's the potential money that could flow into this space. And then it's a question of, where does it flow? Bitcoin and ETH, for as silly as it sounds, are like the risk off assets. Solana might kind of fit into that, starting maybe to fit into that category. And then it becomes, what are the risk on assets that people are looking to put their money into? And that's where these narratives start to come into play. Is that going to be DeepIn? Is it going to be AI? I don't really have a strong opinion on whether it's DeepIn, it's AI, or it's something else. I would say that, DeepIn, I love the concept. I think it's a really great real world use case that's not completely, it's a nice blend of like, how do you, so one of the things actually got me really interested in crypto to begin with, but how do you leverage a global network of people, of actors to come together to do something? Typically this is the role when you think about infrastructure that governments typically play. They step in and provide incentives. And so, this kind of replaces the role of government in that sense. If you think about decentralized infrastructure, right, you're getting people from all over the world to commit their own resources, incentivized by tokens. We're seeing that, I think, with telecom networks, but I think it's even interesting to think about that with scientific research, or even renting out GPUs or your own training data for AI. So I think that's a fascinating narrative that could develop. It's an exciting one. I don't know if that one will manifest or not, but it seems like a promising one. On AI, I would say I'm most excited about blockchain as an antidote to the provenance problem that's created, by AI. How do you know, if an image is in fact its original version? I think, we also face a lot of UX challenges here. First, how do you auto write that first version of a photo or a video on chain? Or if you're looking at an image, how do you validate that that image is real without having to like copy and paste it into some tool, right? If you can, we have the power to write anything on chain today, but I think it's more, when you're scrolling something, no one's going to be like taking this image and moving it somewhere else. So how do you validate that? That becomes, I think, more of the challenge, the UX challenge there.
I like that as an anecdote to providence. I like it. That's how I've been looking at it too.
Yeah. Yeah.
So, one thing with the macro environment is that, we have some elections coming up.
Yeah. That's going to be a big factor.
But around the world, right? So how do you think that'll help with the macro?
Yeah. Yeah. I'm not going to comment too deeply on that, but
Yeah.
it definitely is another big macro factor. Yes.
Okay. So, interesting. I want to thank you very much for your time today. I really enjoyed talking to you, and the time flew by. So, I have one last
thank
question.
you so much for having me on.
Yeah, I have one last question for you. This one's easy. It's how can people find out more information about you, about Flipside, about your company, become a client or a user? How can they do that?
Yeah. So I'd say the first thing is go to flipsidecrypto.com. It's free to sign up. We have a very generous free tier of usage. Actually, the only time that we charge people is when you want to build, like, say, a company on top of us. Other than that, like, you pretty much are free to use our data how you see fit. And if you do want to build something really serious, we're willing to work with people on that. The second thing is, if you're a blockchain or if you're a protocol, we'd love to talk. We've helped a lot of customers grow in this space, have been a big reason for their growth. And so we're always on the lookout for, who can we partner with next to really ultimately fulfill our mission of helping blockchain ecosystems succeed.
Awesome. Thank you very much for your time today.
Thank you so much. It was great to be on.